And if you recall, 2 months ago we were talking, if you're gonna hit 4, which I thought we weren't gonna.
Yeah,
In
then
June we didn't, but July it did, and we're right now almost 4.5 months of inventory. So this is
I think there's only because there's not enough buyers right now. That's the thing. Active buyers. Yeah. Everyone's kind of preoccupied with other things. Yeah. I think that's the only reason why we inched up to that 4 months. So
and I think so too. So main point of it, I think, is as soon as the rate dropped in July, a lot of people, that were still waiting to put properties on the market, they brought it on the market, but not a lot of sales happened, and buyers don't see a rush to.
No, they don't. No, they don't.
Oh, you know that firsthand.
No, they don't see a rush.
Hi everyone, and welcome to another episode of Reality Check, where we discuss what's happening in Toronto's real estate market and hopefully
help you make informed decisions
where it's going. So we're back and midsummer pretty much. Gonna talk about July stats, and
can we just say summer is over?
Summer is over
because it's back to school. It's September.
Summer is over. I hated it back in the day when I was in school, and like pretty much starting July, all day back to school as we're running. I'm like, we still got a month.
I love back to school. You feel it in the air, the new pencils, the notepad.
Not a fan of it. Never
okay.
was. I don't know how I got through university, but
here you are, thriving.
Here I am selling real estate. So let's talk about what's going on in July. So as expected, July was slow, despite the fact that we had the second rate decrease.
Yeah.
But again, it's July, and August, I think it's going to be the same. I don't think we're going to see much happening throughout August.
We have our next interest rate announcement on September 4th. I don't think
that when it is?
September 4th, yeah. And I don't think anything's going to really change too much until then. However, I am feeling a lot more activity in showings, personally. You can disagree. It's just what I'm feeling in like showings that I'm going on showings with my clients. And I'm definitely feeling like there's a lot more activity happening. But again, it really depends on the segment product type, because we do have a lot of listings where I'm not feeling the showings.
Yeah, no.
So I know you looked at me super traumatized.
No, 100%. Yeah. Seems like there is more showings. I mean, we sold a few things.
Depending on what though, right?
Yeah, 100%.
Yeah.
We had a listing in Beaches, so semi-detached.
Yeah.
And
that did well.
Yeah, I mean, it surprisingly, and we brought it out during the long weekend of August.
The weird time of August, yeah.
Yeah, and which kind of I'm always against it, but we had to bring this on the market, and
circumstances.
We did it. So it wouldn't be my first choice, but surprisingly, it did well. Reason being, not a lot came out, and as soon as
you're in the
sold,
Beaches too, though.
Yeah, and as soon as it sold, there was probably like the day of the offer date, I saw 5 new listings. Literally,
timing is everything.
Competition came on the market, so I
Timing
think it was a good move to bring it out.
Yeah,
because everyone was waiting for after the long weekend, but it
just
sold.
Like I think everyone's gonna wait till September.
Yeah, and it sold like 165,000 above asking. I would say at least 65,000 above what we expected it to sell.
Oh, that's great! Congrats.
Yeah.
How was the open house? Was it a lot of traffic?
Open house, we advertised the heck out of it.
Yeah, and that location, I would assume it was actually pretty.
Yeah,
pretty
it was
decent.
pretty busy. I mean, like for what it was, I didn't expect it to be that busy, but it was pretty good.
Good to know.
And again, long weekends, not a lot of people go out,
sure.
But I think because of the location, not a lot of competition out, so people still came through, so it was good. But with that being said, July, the average price actually fell down. So we were sitting at 1,106,000, and it worth mentioning the last month it was 1,162,000. So May and June it was pretty much flat. I would say April, May, and June prices were flat, and then now we've dropped a little bit due to the fact that the number of active listing has risen. We have close to 24,000 active listings. Only 5,400 sales. So the months of inventory pushed up really high up. We're well over 4 months now. And if you recall, 2 months ago we were talking, if you're gonna hit 4, which I thought we weren't gonna.
Yeah.
In June we didn't, but July it did, and we're right now almost 4.5 months of inventory. So this is.
I think there's only because there's not enough buyers right now. That's the thing. Active buyers. Yeah. Everyone's kind of preoccupied with other things. Yeah. I think that's the only reason why we inched up to that 4 months. So.
And I think so too. So, main point of it, I think, is as soon as the rate dropped in July. A lot of people, that were still waiting to put properties on the market, they brought it on the market, but not a lot of sales happened. And buyers don't see a rush to.
No, they don't. No,
Yeah.
they don't.
Oh, you know that firsthand.
No, they don't see a rush.
Yeah. So, and with that,
Oh, you got a little pointer? Cute.
no, it's my pen.
I like it.
It's my pen. With that, days on the market has gone up, 24 days.
I'm not surprised.
So pretty much,
I think that will soften by next month, last month. You know what I mean?
I feel
We
like
look back
August
a
is
little
gonna
bit?
be. I think August is gonna be almost the same. I don't think market is gonna improve. Maybe even like the months of inventory could go up unless
little bit.
people actually take listings off, which I think a lot of people are taking their listing off to relist in September. So I think we're gonna
It's
see
funny
a
you say
surge of
that.
listings coming on the market, and we saw that, if you recall, last March too.
Yeah.
A lot of people that took off in November, December.
Yeah.
they
They
came.
relisted.
So
Which is not a bad strategy. It's just a strategy that a lot of people are using. So just be mindful when using that strategy and know that, you may also encounter a little bit more listings at that
Yeah.
time all at once.
yeah,
But the hope is that there's also going to be a lot more buyers all at once, right? Which, given the interest rate, hopefully, if it drops, then that will happen,
exactly. So
right?
one thing I want to compare here to is what's going on, because we talk about active listings being high, months of inventory being high. Not a lot of people understand. Okay, what does it mean to be 4.4 months of inventory, 4.5 months of inventory? To put things in perspective, 2021, the craziness
Yeah.
that was happening in July, which we had one of the hottest Julys and
Busiest.
Augusts in 20
miss
years,
those
25
days.
years. Yeah. The months of inventory at that point was 1 month of inventory. So we have it exactly 1.04 months of inventory in July of 2021. And again,
But the
to
prices
see-
were even lower
so that's
than now.
exactly my point. So the average price at
Oh, I
that point was
sorry.
$1,061,000. So it was jumping up, but it was $1,061,000. And right now that the market is down, we're at 1.106. So it's not so bad. I mean, let me.
I want to go. You finish your thought
Yeah, I
first.
want to also say that yes, this is an average price. So condos and
Everything
freehold,
included.
yeah, included an entire TREB market, GTA market, but there are instances that someone bought, and I've seen it in July, August of 2021, they still are below what they paid. Things like that has happened.
I think that market was overstimulated. And when you look at a graph and you see those high peaks, I almost want to not discard them or disregard them. But at the end of the day, are those real numbers to really factor in at all?
Well, ups and downs.
No, not the ups and downs. That major peak in 21. It's
No,
almost like
major peak
over
was
in
2022
But-
February.
both of them,
Yeah.
both years actually. Through
Well, you can't
21
really-
and 22, that
You
that
need to
whole time of
disregard
COVID.
that. Yeah, you need to disregard
Not
that. But
disregard, but really it doesn't have a lot of weight, in my opinion.
well, you need to. What I always say is, assuming we're talking about the peak of the market, February of 2022.
I'm talking
How many
COVID.
sales happened then? 6,000, 7,000 sales. Let's just assume, right? I'm just talking about the peak.
Yeah.
So only
Just
like
that
6 or
isolated
7,
month, yeah.
6 or 7,000 people transacted. Other than that, everyone else should be in not have bought in peak.
Yeah.
You're talking about COVID, meaning what?
I'm just saying how I feel like COVID, the pricing was so overinflated and the market was so overstimulated that I almost don't really factor that. Like when I'm showing graphs to my clients, for example, I show them the ebb and flows and I show them the trajectory on an upward, incline over the last 10 or even 20 years, let's say, for example. But that moment in time, it's almost like we're not ever really going to peak that high that quickly again, or maybe we
So-
will, but
so I
it's
mean,
not real in my opinion.
So let's talk about the graph. I have the graph here.
Yeah, pull
As
it
we
up.
can see, April of 2020, beginning of it. So the interest rate was at its lowest point. And as we see, coming out from April and May, which was, I would say, the craziness of COVID was kind of subsiding, and lockdowns were starting to lift up. So July and prices picked up pretty quickly, reason being the interest rate dropped so dramatically that a lot of people that
You're in 20 right now where you're pointing though, so we're not
2020.
we're in the wrong
2020.
year, no?
No.
You said COVID.
So this is 2020.
You said post-COVID, not
No,
pre.
no, pre-COVID.
Okay, just want to make sure people know.
So pre-COVID, well, I mean, this is right after COVID came. Like, so the April of 2020, March was the first lockdown.
Yeah.
So this is exactly what happened at the beginning of the, the first year of COVID. And again, December always prices are down, but we see an uptick almost every year. I've gone back. In February, the market picks up, and here is no different. We see February huge jump in prices, and things kind of go up and down. And 2022,
and interest rates had remained steady throughout.
Yeah.
Just wanted to point that out.
And the interest rate has been steady. So the only thing that was kind of fueling the market was a speculation. I would say at that point, a lot of people
panic.
were getting FOMO.
The excitement.
Yeah, because you would get the FOMO.
We had cabin fever. I think that's what it was.
Well, I mean, like, a lot of people couldn't get out, and then a lot of people wanted the detached homes, and that's where the
more space.
Yeah, where market kind of went crazy. But it's crazy to see that you could afford to buy something, let's say, at $1.1 million. And I remember in East York, we were looking at a bungalow for 1.1. Client ended up buying it at 1.15. And right after, they jumped to 1.35, 1.4. And I think they sold as much as 1.43 at the peak of the market. I mean, like, if you're in the market and you want to buy something at 1.1, 1.15, and then suddenly you see that jump 200,000, that's crazy. Like, you'll panic too.
And you're still running to buy?
Yeah. So, and this is why we saw that happen. And then as soon as March came along with the interest rate hike, we see the prices just like drop. And whenever we see a huge uptick in prices in a span of like 30, 60 days,
that's a really tight time frame for prices to go up.
Yeah. When you see stuff like that, you got to kind of expect for the prices to also sharply decline. And this is what we see, especially coupled with the interest rate hike.
Which is a correction, essentially.
Yeah. And again, it worth mentioning, as soon as the prices kind of stabilized around mid 2022, interest rates kept rising up. But as you see, like, prices kind of
remain steady.
Yeah. And then last year, around April, May, it jumped up again. And the interest rate has been at its peak at 5%, and prices were kind of wobbling around. Funny enough,
I like that.
The interest rate has dropped half a point in the last 60 days, but the prices have also dropped. Why is that?
I just think people are disinterested. I also think people are not really focused on, like, for me, the buyers, let's just say, right? The buyers are not really feeling like maybe that's enough. I think they're also waiting to see, because they're like thinking more. Prices are going to come down more, and interest rates are going to come down more. And everyone's really trying to time the market.
Yeah, and that's
I have
exactly
savvy investors trying to time the market even. And we all try to do it, right? And we do our best.
I think the best way to time the market is buying assignments, because then you buy it now. Then
shameless plug.
Yeah.
Go for it.
Join our WhatsApp group. Join it. We're going to put the link. We're going to put the link, Nick, in the description below.
Yeah. And while we're at it, the YouTube page, like and subscribe.
Yeah. Please like and subscribe if you find this video useful.
Which you should.
You should. Hit that bell button. Hit that like button. And you know what?
And maybe put some hearts.
Yeah. Put a few comments down there, please.
What? I love the hearts.
Yeah, I gotta love the hearts. And
love.
You know what? We should run a contest and say whoever shares it on their screen.
Oh yeah, I love that.
Yeah, you know
what are they gonna get?
I don't know. What is it?
Something
Starbucks
exciting?
Card?
Yeah, we can do
or
Starbucks or even Uber. Everybody
card.
Ubers. Stay safe.
You know what?
Go drink. Have a drink somewhere, and then don't drive home.
Share it on your page. Send us a screenshot of it. And then we'll pick a winner and give a $50 Uber card.
Depending on how many people participate, curveball, we might up that price.
One.
No,
well, we'll
depending
pick
on how many people participate, we can up that Uber prize.
Let's say if you get over 10
That's
shares,
good.
We'll make it 100.
There you go.
That goes to show how.
I'm always trying to make you spend money.
Literally. I'm good. Like, I'm just, I don't know. We'll see how many people share it. But if more than 10 people share, we'll up that to 100.
Yeah, why not?
Yeah, why not? Got to remember to pick a winner next one.
We'll remember.
Yeah, we'll remember. What is that, in September?
We love it. Yeah.
Yeah. So with that being said, I mean, that's where we are right now. The prices have come down. And
so I just want to also drop this in really quickly. So one of the owners of Royal LePage Signature, which is the brokerage that we're at, shared a really, really interesting graph. And it basically shows what the target projections are, if we look at something, basically, we'll call it around 7% appreciation year over year, where we would be. So if you look at June of 2004, the average price was 300, we'll call it 315. The projection is about 1195. And then we actually landed at 1162. Let's just fast forward.
Man.
And that's crazy because we're actually kind of right on track.
Yeah.
So if you look at it, and that's kind of why I wanted to tie this in to my comment about the overinflated pricing during COVID. We look at it, yes, because it happened. We can't just omit it from the data.
Yeah.
And I never want to do that either. But it is overinflation, and you don't really consider it when looking at your projections.
Yeah.
If you landed in that market, great. You guys did great selling. You know what I mean? Now we're in a different climate. That's really all it is.
And, you're comparing 2009. If 2009 average price was 404,000, today it should have been at, what are we right now? 1,094,000. So we're about 67,000 ahead. So about 6% ahead. 2014 average prices were around 67,
69 we'll call it.
And average price
Target
based
projection.
on the target projection should have been at around 1.106. So that's still 56,000 ahead of the market. And 2009, the average price was 832,000. 2019 was 832,700. Projected price today should have been 1,160,000, and we're right on there, like 1,300 different.
Yeah.
So this goes to show again, if anyone's buying long-term real estate, you're looking at around the 7% appreciation year over year. Yes, 1 year you're gonna get 20%, like what happened during COVID, but then right after it, you're gonna have a massive drop. And again, you can never time it. It's easy to say, okay, you know what, this year it went up, so it's gonna come down next year. No, it doesn't happen like that. Like, during 2000, I would say 12 all the way to 17. I would say pretty much anywhere from like 2010, once 2008 subsided, 2010 all the way to 17 market was doing pretty good. And then suddenly, 2017, we had the huge drop. So with all of that, long term, you're a winner, I guess.
I think it is a long-term game. At the end of the day, we always say this, and you're not really buying and exchanging hands every 2 years, right? There's got to be a real need to move. If you just buy your house, you're not going to be.
And realistically, if you're buying a house to live, I don't see why you really care how much it's gone up, because if you're selling and buying something else, then it's gone up too. Unless you're buying for investment, let's say buying an investment property, then you would want to buy somewhere that's got a high growth potential. And I want to make this point. If you're buying an investment property, you need to put emotions aside and look at numbers. You want to buy somewhere that has a huge upside potential, meaning somewhere that right now it's underrated. If you're buying, let's say, downtown core right now, let's say buying in Nobu condos, well, you're buying Nobu condos, like it's hot right now. It doesn't mean it's going to be hot in 10 years. But if you're buying for investment, I'll give an example. I bought an investment property back in the day when Shops at Don Mills was being built. The Don Mills Center was, lack of a better term, not a fun place.
A hole in the wall.
Literally
not a hole in the wall, but
but
hole in the ground.
Cadillac Fairview bought the place, turned it upside down, and one of the first projects they put up for sale was Live Loft Condos, which was a loft conversion. It used to be an office building.
You had a lot of fun there.
Yeah. It was great. I had a blast. I thank God I got out of there. But point being, I was running a chart for a client. I took the client to the sales center, and it's funny. I did a lot of Excel chart and price appreciation for the area of Don Mills. And so for the last 3 years, they've been going up. And I went back on the news and I saw what has been happening. As soon as the news for Shops at Don Mills came out, all the surrounding condos went up in pricing. So I'm like, okay.
It's crazy what the media has power over.
So just imagine once Shops at Don Mills is built, I knew what was going to happen, that we never had an outdoor mall. So it could have gone wrong. It could have been great. I bought into it. Yeah. There was a great incentive. No one was actually buying in Shops at Don Mills. And I remember when I bought it, they had a 10% deposit structure. I believed in it. I saw the potential, and this is what you want to do. You want to buy somewhere that's underrated and there's a huge potential. So bought there, things picked up there, and now they're selling pre-con there. The last project was selling what is this? The rodeo condos that's coming up right now. The assignments are selling at around $900 to $1,000 a square foot. So with any investment, you don't want to necessarily be buying somewhere that's already hot. Otherwise, if you're buying in anywhere, then you're going to have the average growth. If you're buying investment, you want to find a potential, find an assignment that someone needs to sell, because you can't really publicly advertise that. So you are more likely to find something under market value. 2, you want to buy in emerging markets. As an example, if you're investing, you want to invest somewhere that there's transit, or there's a new transit coming, or there is new employment opportunities, or there is something happening. As an example, we've talked about Hamilton previously.
Yeah.
They got the LRT coming. They have the infrastructure that's coming with the steel port.
They have all of the, we'll call it amenities.
Yeah. So these are the type of things that will give you potential to beat the average 7% on the market. But
I think people are too caught up, going back to your point, is they're too caught up in what's my return on the month rather than the year or the long-term growth. And that's where you really got to look at your investment and say, what am I trying to achieve? Am I trying to achieve long-term growth, or am I trying to be cash flow positive today?
Yeah.
And oftentimes those two things don't happen at the same time. So going back to people going to Nobu, I think it's because they thought, hey, I'm going to charge top tier money for the rent.
Yeah.
And it made sense for an immediate cash grab.
Yeah.
Right?
100%.
Yeah. So that's something I just wanted to leave the viewers with.
And, right now, July of 2024.
I love this.
Just overall, GTA, Toronto, York, Mississauga, Durham, Oakville, all these areas are negative in price changes. But again, it's
except
1
the
month.
condo market in Oakville.
Condo
is
market,
up by 4% of some sort.
Condo market in Oakville is up 4%.
Which that's a little bit of a whoop. I didn't see that coming.
Yeah, and I think the reason for that is there was a bunch of completion of condos that happened in the last few months. Some people are reselling those condos, and given those condos were purchased at a crazy high prices, they pulled the prices higher because we don't have that many condos in Oakville to begin with.
Contrasting downtown, there's a lot of good deals to be had.
Downtown, there's a lot of condos.
Undervalued.
Literally undervalued.
Yeah.
Another thing I want to talk about is what's going on in different segments price-wise, and just putting it out there. Although right now things are not looking good, but there's a lot of opportunities. Detached market in Toronto right now is down by just over 100,000. Last month, average price was 1,758,000. Now we're sitting at 1,648,000.
To steal.
Yeah. And condo market, funny enough, although it looks pretty grim, they've held pretty steady. The average price has fallen by, how much is that? 15,000 or so?
It doesn't feel like it, though. It feels a lot worse.
And look at it. It's been holding pretty steady. It's been around 766, 767, 763. So it doesn't feel like, but the prices have actually held. And that's because a lot of people that can sell are taking it off the market. They can afford it. And that goes back to show people can definitely afford to hold on to these things. So
they can weather the storm.
Yeah. York region.
The storm of the interest rate, just so that people are aware of what I'm talking about.
And it's coming down, so things are looking good. Same thing is happening in York region. The average price of a detached in York region dropped month over month, June to July, 100,000. And condos are pretty much steady. They're about 12,000 lower, which is really nothing. But the detached market, that's worth mentioning, both in Toronto and York region. Richmond Hill, Aurora, Newmarket was down around 100,000. So if someone is looking to get into the detached market, these are the months you want to be looking at buying detached. Especially a lot of people need to get out of their home for school year and get into another house. So August is the time to be looking at homes.
Do you feel like in York, a month, not last month, the month prior, do you feel like there was multiple offers? It was working. The market was heating up, and this month people are trying that multiple offer strategy.
Was it last month or was it?
So right now we're August.
Yeah.
So July.
June.
June it was working.
Yeah, June it was working.
End of July, that strategy started to seem like it was ineffective, and things started to kind of sit on the market. And actually, the prices are not even adjust according to their value. They've kind of just sat at that list price considering the offer date, and it's still not budging.
Yeah. And I'll
Okay,
tell
you are
why.
feeling that. I am feeling
and
that
I'll tell
too.
you why, because back in, for example, May and June, average the months of inventory in York region was around between
Yeah.
3 and 3.5. Now it's well over 4. I think in the York region we're close to like 5
But
months
there's
of
still not
inventory.
much. But there's still not a lot of inventory considering the usual amount there would be.
Yeah.
So that's just food for thought. Like I wonder what it's going to be like next month, like this month, when we're talking about it in September.
Yeah, I think things. I think August is gonna just stay
Stagnant.
pretty much flat.
Yeah.
I wouldn't be
or a
shocked
little
if
dip,
the
little
months of
dip.
inventory goes up.
Yes.
But
Yeah.
my gut feeling says a
I'm
lot
on
of
the-
people are taking listings off the market because
Yeah.
that's what I'm seeing. I haven't seen that many listings come on the market, especially now that we're recording. Like we're like
Yeah.
first week into the first week into August. Anything else we gotta mention?
No,
No,
I just
any
wanted to
condo
touch on
launches?
that. Just
Nothing.
also, I like to no condo launches,
Nothing.
no condo sales either.
No condo sales either.
But assignments,
Assignments, yeah, there's a lot of opportunities there. I've seen
All different
detached
price points.
assignments again come on the market.
Yeah.
Regions that I see it in Brampton, I've seen a lot of detached in Brampton coming for assignment. Markham and Oakville. In terms of condos, there's 2 condo completions coming. I think one of them is called Vandome in Markham, and there are some good deals on assignments. And crazy enough, those condos.
the rents in Markham are not bad either.
Rents are not bad.
Yeah.
Even the resale prices are very much like downtown Toronto. A lot of units are selling around
I was just
900
gonna
to
say,
$1,000
that's
a
funny. I
square
can
foot.
compare it to that.
So there's a couple of assignment units. Assignment
You know why
projects.
though?
Yeah.
You know why? I can't
Yeah.
say why, because it's controversial. But where the money is, the money flows.
But realistically, there's a demand that you know
Yeah.
this is happening. But with that being said, there's a couple good units, good condo projects that have units on assignments in Markham right now. Downtown Toronto, there's plenty of good deals.
Inundated.
Yeah. Brampton,
Pick your project.
yeah, a lot of good deals. And yeah, that's pretty much it. And again, as always, if you guys find this useful, make sure to hit that subscribe button.
And we'll schedule one-on-one calls if you guys need.
Really, like any questions that comes up. I had someone that was working with another agent call me.
I love those calls.
Yeah, and just asking, that they're not getting any showings, and it's a condo product, Midtown Toronto. They're priced high. They were like I looked at it, and they were priced at just over $1,000 a square foot. And I'm like, who came up with the pricing?
It's a little high,
We
yeah.
told them. And
Where'd you get that comp from?
yeah, and I'm like, listen,
Last year?
realistically, they're hovering at around $910 a square foot. You're priced at around $1,070 a square foot, $1,060.
But if there's something special, I can get behind that
yeah,
price,
no,
right?
it's cookie cutter.
Basic.
Basic condo. Like the only thing you're competing on is your floor level, and that's it. There's no different finishes. So, yeah, those things you got to be competitive with your pricing. And I think that's pretty much it.
Yeah,
Next time
I
we're
don't
gonna
expect much to change next time we see you guys. So
Yeah, but I think September
short.
it's going to be interesting to see. So in a couple of months we'll
in
see what's going
October,
on.
we'll have a good session.
And make sure if anyone is sharing any clips or episodes, we're going to enter them into a raffle $50 Uber gift card. We'll see you guys next time. Have
Bye,
a great day.
guys.